Welcome to ALAQA, a podcast about the relationships shaping systems, capital, and the climate transition. This special playlist is developed in partnership with Change Now. We welcome some of the fund managers who presented during Funds for Change. Since they only had but a few minutes on stage to explain the unique angles, the sophistication of their approach, the urgent needs they want to address, we decided to offer them more time and broadcast their ideas to a wider audience. Today, I'm joined by Michelle de Rijk, an impact investor with over 15 years of experience across venture capital and impact investing, currently at Fair Capital Impact Fund. Michelle spent a decade at DOEN Ventures before joining Fair Capital Impact Fund, where she has been involved in backing and supporting companies such as Fairphone, Seepje, and Crowdbuilding. Across her career, Michelle combines professional investing with strong commitment to building a more equitable and sustainable world, with a sense of purpose and genuine enjoyment of working alongside founders, colleagues, and partners. So why is Michelle with us today? Honestly, I couldn't dream of starting stronger on stage at Funds for Change than with Michelle, because she brings a set of sharp convictions. Michelle and her team believe the world can operate within its natural limits. They believe that staying within planetary boundaries is not only an environmental challenge, but also a social one, and fair transition is a key enabler. They also believe that behavioral change is central to systemic change. And finally, and perhaps the bolder for a lot of investors, they don't believe in carried interest. For them, you don't need bonuses to build a great fund. You need relevant experience and intrinsic motivation. Michelle, hello. Welcome to ALAQA. Welcome.
Thank you very much, Iman. Thanks for inviting me.
Of course, you are among one of my favorite encounters at the last edition of Change Now, and more specifically Funds for Change, for many reasons. One of them being that on stage at Funds for Change, you helped me to ignite a sense of alignment and authenticity and commitment from the get-go while doing your pitch. So just for that, when you moderate a full morning, it can be sometimes a bit exhausting and difficult to put the room in the right mental conditions, and you helped me to do that, and so thank you. Just at least for that, it was excellent.
Yes, great. No, great to play that role.
Which was totally unscripted, and I loved it.
It was, but I like it.
Yeah. So listen, Michelle, we've been partnering with the Change Now to help expand the conversation from strictly the moments around the event, but throughout the year, through this special season of ALAQA. So I feel very fortunate to have been able to pick some people that I particularly enjoyed listening to, supporting, exchanging ideas or provocations with one another, and also to bring additional light to some of the funds who pitched at Funds for Change. And you were, for me, the most, not thought-provoking, but it's one of the funds who questioned many things that seem to be a given, seem to be natural, when in fact they're obviously man-made. And so thank you for allowing this level of discussion and conversation at the event. And without further ado, would you like to start by telling us a bit more what's your fund all about, Michelle?
Of course, Iman. Thank you very much again for the invitation and for picking us, and to be able to share the story here as well. So I would like to take the opportunity to tell you indeed how we actually took over, let's say, 30 years of experience in impact investing and really turned that into a fund so that it's built for entrepreneurs, for investors, and for the planet. I think that's the most important one. So let me start then with the core of what we do. So we're actually really good in finding good and inspiring entrepreneurs. And at the same time, we see a lot of wealthy individuals that genuinely want to invest in those entrepreneurs to further their businesses, but they simply don't have the time or the experience and the team to do it themselves. So that's where we come in. So we're really a bridge between these worlds, between wealth owners and successful or potentially successful sustainable startups. And we try to be a really trustworthy and transparent bridge. We've chosen 3 sectors where we believe that bold entrepreneurs really can make the difference and really are needed to change the status quo. So first is our food system. It needs to be more transparent, more local, and more plant-based. Second, circular economy. We need to use resources over and over again and not use them and dispose them. And third is energy. So we really need to move away from fossil fuels and make much smarter use of renewable energy sources. So that's really the themes we're focusing on. We really find and fund companies that are accelerating these transitions.
I have two questions for you. One, how do you evaluate or filter in or filter out what you call an inspiring or bold entrepreneur? Because, there's a lot of homophilia in the innovation funding space. Let's put it this way. I want to use the word VC, so innovation funding space, in impact or not, by the way. There's a certain beliefs of what boldness or what inspiration looks like when it comes to entrepreneurship. So would you like to share with us, what does it look like? What does it feel like? What does it not feel like when
Yeah.
you
Yeah.
engage with this type of entrepreneurs of yours?
Yeah, of course. The people behind the companies is really what we focus on, because we start very early. So it's really important to build a relationship. It's like a marriage. You start with the founders, a long-term relationship. So that's something we really focus on. We're looking for diverse entrepreneurs, but what helps is that we have a diverse team. So our team is predominantly women. And I think the way we have conversations amongst ourselves is different than when you have a very homogeneous team. But what boldness for us is really people that can look beyond themselves as well. It's not one conversation where you can really get to know someone. You really need to put in more time and effort. And what we try to do is try to get these founders out of their comfort zones, try not to meet them in only meeting rooms, but try to go for a walk, try to see them in a different context, and then really get to know the person behind only the story of the pitch deck. And I guess boldness, or what we like to see in an entrepreneur, is someone who can think outside the borders of the company and also who has a lot of self-reflection. I think that is super important for a really good entrepreneur, is someone that knows his or her own limitations and is able to talk about that already very early stage. How are these people trying to build their team? How are they resilient? How will they act when things go differently? Because it always goes different than planned. We try to get a sense of, by questions, getting them out of the comfort zone, how will they respond? But also, if you look at the company in 5 to 10 years, what do you need and who do you need? And really try to see if they are able to look beyond their own capabilities. And I think that is, we're not chasing unicorns as a fund. So we're not trying to find an entrepreneur that can tell the story of how the company will have this hockey stick growth and end up here. We try to really get the real story, and we also try to have an honest conversation. And that's the screening process or the due diligence process. Try to get to know these entrepreneurs and see if they have that in them.
It's really paradoxical, and I like it, but it's really paradoxical or counterintuitive that the way you define boldness and the way you're describing what it means for you as a team entails so much things or characteristics like humility, like self-reflection, patience as well, because taking the time to go for a walk and anticipate things, but in a way that it is not mechanical and robotic, I find paradoxical, because it's not the usual meaning behind bold or inspiring entrepreneur in innovation finance space. So,
though we think actually these characteristics bring a company as a whole way further than maybe what the typical boldness, or I think you can have both these qualifications and aim for the moon with your company. But I really believe that if you have that in you, it can really bring you very far as an entrepreneur.
Thank you for that. The second question for you was, you say that you play a role as a bridge between founders and wealth owners. I've changed now. Astrid Lessens from We Are Innovation Collective mentioned the fact that she considers that investors should consider themselves bridges, from one moment in time to another, to help catalyze and accelerate a certain stage of development of a project or a company or an NGO, but not so much the center of everything. So how do you help your LPs, so your wealth owners, who are your supporters as well, in a way, how do you help them distance themselves from the conversation through this role of being a bridge, being a facilitator, being a conveyor of resources and support, but not being the center of the conversation? How do you do that?
I think one of the most important things in order to be a good bridge, to put it that way, is listening. a lot, trying to bring the story across of what we do. What we do is, I guess, least important in this whole ecosystem. And even really telling the story of the founders of the companies we invest in only helps if we listen first very good to our LPs. We have a very diverse set of investors. It's all families, it's people who have sold their company. We're really building this fund without institutional capital because we really believe that the personal relationship you have with your LPs is very important. Also because you can then really maximize your own impact as that bridge. So we really have conversations with them and listen to what they are looking for and what their background is, what they try to achieve with their wealth, what they're not looking for, what is important for them. And then we really try to match that with the investments we make and also with the role we try to play in the whole system. I think there's one commonality is that it's super dark green investors, because if we make an investment, like impact is the first thing we look at. So there needs to be alignment between what they are looking for and what we can do with our fund and the type of investors we can invest in, of the type of companies we can invest in. And then we really try to be as transparent as possible about what we do, because a big part is managing expectations and really be super transparent about timelines, about impact, about the role that portfolios will play, because we also really look at it. I think it's like terminology that is used a lot is systems change and systemic investing. It's not a label that we necessarily use, but the way we think about our investments and our portfolio, I think, is really in line with what systemic investing wants to do. So you don't invest in only a company for linear impact, but you look at the ripple effects, you look at the whole value chain that they try to impact. And you really need to understand that mindset. And we really try to bring that across to our LPs, because it's not only the company we invest in. And if you then look at the impact, you can look at the CO2 numbers. But it's not only that number. It's early stage. It can be a small quantitative number. But if you look at what that company tries to achieve in different ways, you can define impact in a broader manner. We also have an educational role towards our LPs and really try to explain what we do, why we do it. That is, I guess, essential also in building this long-term partnership, also because things definitely go wrong. And it's part of the game. But sometimes things can go wrong and they can even have a systemic impact or an impact on the longer run on the sector as a whole, for instance. And then the company could have failed. And I guess that's the role we try to play in educating and being transparent and then managing expectations. I just wanted to give 2 examples and then maybe characterize the type of companies we invest in a bit. The first example I wanted to give is Otterkais. It's a company that converts waste streams into high quality gas and biochar, which is a natural fertilizer. And the second example is Crowdbuilding. It's a Dutch company. It's completely steward owned. It's one of our most recent investments, and it's really focused on affordable housing. That's a massive issue here in the Netherlands, and we need more homes, and we need the entire construction sector to become more green. And they are really creating this platform for all stakeholders that really want to encourage community housing and building in the most sustainable manner. And they bring all the stakeholders together, so municipalities, project developers, banks, future residents. And they are building it completely steward-owned. And that's also really in line with the long-term vision we have, and really trying to set examples and trying to use our structure to set examples and to really change the system in the VC world and set examples there.
So could we take a minute to talk about your fund's principles and perhaps what makes you different from an average impact VC or a traditional impact VC, let's say?
Yeah. So what I started with is that we try to incorporate all the learnings that we had with our own fund investment experience and try to really set it up a bit differently. So I guess the most important thing is that we believe in patient capital. So our fund is open-ended, and that means no exit pressure. So we can really also weather through storms and market shifts together with the founders and really genuinely wait for a good strategic moment to exit. And I think if you really focus on early stage and you want to be able to stick with these companies, then you really need more time than closed-end funds might be able to give you. And also because we see that there's quite a gap between the seed funders, early stage, and it becomes bigger and bigger. And after that stage, like before the commercial capital is able to get in, this gap is getting bigger and bigger, and it becomes more important to stick with these founders and to really give them the trust and keep them well funded. So I think that is also something we really want to play an active role, and not only focus on one silo of funding, but really try to bridge that gap and stick with them until there are just other market players that can take over. So that's different and maybe a bit more controversial, but we don't believe in carried interest. I think I mentioned that in the fund pitch as well, and it also always raises eyebrows. I guess the bonus structure is, that drives so many other funds is quite financially incentivized. We just don't believe that these financial motivations are the way we are encouraged to work in this sector. I think the work itself is fantastic. The founders you get to work with are fantastic. We are investing other people's wealth into these companies. So it's not because of a potential bonus in 10 years that we want to do this work. I'm speaking for myself, but I guess also for my team members. And we've also seen that it can lead to a lot of frustration, actually, if you have this carried interest structure in your fund and things go different. You can really get demotivated teams, and that's just not what you want. There are many different jobs where people do super important work and they don't get a bonus. Yeah, we just cut that all out, and we do invest ourselves. The whole team, like everyone has invested a relatively small portion, but within the capabilities of each team member invested in the fund. So we're very aligned, and we just get a straight management fee. So these are the most important things that we do differently. And then, like I said before, we don't chase unicorns. So we want to build just a stable portfolio of successful companies, but does not need to compensate for the other companies in the portfolio. We have an open end, but also an open beginning. So we have no closing deadlines. But if someone wants to start impact investing, dip the toes into the world, you're always welcome to join. You don't have to wait. We formed a very interesting group and community around us of people who believe in doing things differently and also believe in us and our experience.
Excellent. It's interesting the way you coin the notion of having no carried interest as controversial. I don't know if it's controversial or not. It's just that it reveals a number of beliefs in how motivation works and how guidance and governance works by default. I think that's what it says, and beliefs and practices. But if you say, hey, we're trying to do this work the way you're describing it, with founders who are aligned with this and this and this type of expansion, of relationship to time, relationship to ambition, relationship to risk, relationship to partnership, the fact that you would translate this nature of relationship to your LPs, to the wealth holders as well, is kind of reassuring if you think about it for a minute. Because in fact, there's a clear parallel, in the nature and the calmness, the tranquility of the relationship. I don't see it as controversial. I think it's kind of soothing, if you will, that in fact you thought about the system at large and tried to decline these principles into a number of practices and ways to behave.
No, that's definitely what we try to do. And I think also it's relatively simple and transparent, as you will. And I think the most commonly asked question, not from our LPs, but from other players in this or other people in the system, is why do you work for this fund if you don't get a bonus? And it actually surprised me. So I didn't think it was controversial when I started, but actually after telling the story for over 5 years and still getting that question in return, why do you work there if you don't get a bonus? It happens so often that I don't want it to be controversial, but unfortunately it still is. Yeah.
I'm just saying that it's literally a reflection of the beliefs and how practices today are designed. It's not immoral what you're doing, so that's what I meant. But you're definitely going against the grain and against the majority of what is practiced today. So again, a big question for you, Michelle. What's the biggest objection you face today from LPs, not from your peers? And how do you usually address it?
The one we just talked about, the carried interest, is not an objection from our LPs at all. But I guess the most commonly asked question is around the open-ended funds and the liquidity concern. So indeed, if you have a closed-end fund, then also as an LP, obviously, you know when the fund manager will start exiting. And you can debate, of course, about whether that's then the right timing, because everyone knows that the fund is ending, so you have to exit these companies. But still, if you are invested in our fund, you don't know exactly when you will exit, because you will exit the fund gradually. Every time a company is sold, proceeds go back to the investors until all the portfolio that an investor is invested in is liquidated. You really need to have this long-term perspective as well as an LP. So it's not for everyone, and that's, of course, that's understood and completely fine.
That's fine.
Yeah, of course. But for us, how we always answer that question is that the team has a lot of experience in building portfolios and exiting companies anyway, but really being able to wait for the right strategic moment that actually helps creating more successful exits. And we still think that the time horizon will match like regular funds horizons. But if there's a market or a sector where it's getting a bit tricky and we need to weather the storm, it's fine. We don't need to exit. We can just wait until the right moment. But that's the most common discussion that we have with investors. And that's also why institutional investors are not able to support us, because we don't tick the liquidity box.
At least for now, because some institutional investors are also seeing that there is some real needs, investment needs, and financing needs that are not met for a certain type of entrepreneurs or a certain type of founding stories, really, and initiatives. And there are some who are considering to try and accommodate.
For sure, we have these conversations and we try to keep them alive, I would say.
No, it's interesting. You know, Michelle, you said earlier that you didn't want to get into the weeds of either systems change or steward ownership. I would love for you to tell us if in the interactions or the discussions you have with LPs, the potential, the prospective LPs or your current LP base, do they expect you to try new things on their behalf in a way? To share the results of these experiments, or it's not really something that is raised?
It is raised, yes. I think the majority of our LPs really like the fact that we're able to be on the forefront of these type of developments. And I think it's a strong thing is that we're not a fund that only focuses on steward ownership per se, or only have this system change label, but actually we want to normalize, or we want to make this the norm, that you can just you don't need a steward ownership fund to do steward ownership investments. You can just incorporate that in your regular fund, because it should be normal that you have a long time horizon and that you have a cap on your returns, because you don't need it to be extreme, but just super decent and good. So I think that is something that we try to really advocate, that we need to make this new structures or just different thinking about the financial system. We need to normalize that. And I think that is something that our LPs really like, and that we talk about it with them. But also, to be honest, for a lot of them, it's also very new. Some of them are new in impact investing itself. It's very diverse. So I guess also the experience and also the involvement. We have a group of 50 LPs at the moment, and it's growing. So I guess the needs are completely different. Some are very involved, some are less involved. And then at the same time, just try to build a decent, successful portfolio down the line. That is, of course, a portfolio that really makes the difference and makes an impact and is successful at the same time. That's good for the sector as a whole as well, and for the LPs.
Thank you, Michelle. Time for a flash round. So it's big questions, tricky ones, and short answers. Are you ready?
Yes.
Yes. Okay. So first question, what stayed with you after Change Now?
What stayed with me is that it was big. A lot of big topics were addressed. Short answer, right? It was big. But in addition, there were a lot of cool small encounters, and that's what I really liked. So really the talks at the coffee machine, the talks during the breaks. I really met some really cool people, and I followed up with them. And the contradiction there, big event, very interesting small encounters, that really stayed with me.
Know that. Second question. At the heart of Change Now, there is collaboration between players. So in your opinion, what would it take to have GPs collaborate more in your space?
My colleague Famke and I had a really great encounter with Anne-Sophie from DOEN Ventures. They were in the same pitch session as we were, so that's how we met. And then we randomly decided to organize a Pizza Planet dinner, People Pizza Planet. And it was actually really cool, and we really became friends. It was super random, but Change Now can maybe do more to accommodate these GP meetups, because there are a lot of like-minded people there. And that can help each other. I think that is super important because all GPs really want to achieve their own goals, but we really followed up and really exchanged a lot and tried to help each other. And that's, I think, super valuable.
Well, thank you, Michelle. That was a lovely conclusion.
Thank you very much, Iman.
Thank you for listening to ALAQA. If this conversation sparked something for you, share it, leave a review, and subscribe for more dialogues at the intersection of capital, systems, and transformation.